Welcome out, Maverick traders, to your market roundup for September 11th, 2023. Corey here with you. 22 years since September 11th attack. Crazy that it's been that long. We all remember where we were and remember that day so well. Let's jump into it here. As we go through the markets, we always start with what was meaningful news, what are commodities and equities doing, and then we take a technical analysis view of the markets, broad markets and sectors, heat map, where's money rotating, and then we'll highlight some new trade ideas. We've got something bullish, something sideways, and something bearish, so a little something for everyone.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so let's take a look at the markets. It was a bit of a quiet day in most markets. You can see the Dow was basically flat, S&P up 0.5%, and the NASDAQ was the outperformer, led by Tesla. Big up day. Russell was flat, oil was flat, gold was flat, but the oil market, the energy sector, really gave back a lot of the last couple of days price action to the upside. They gave that back aggressively. Daily news, Tesla stock soared on an analyst upgrade. The analyst says it's much more of a tech company than anything else. And Disney Charter came to an agreement before Monday Night Football, which was certainly kind of the deadline where people would be canceling their memberships in aggressive fashion, so they beat that deadline barely. Advanced decline line about half and half, 56% of stocks advancing, and then the 50 period moving average remains the same, about 2/3 of stocks below their 50 MA, 1/3 above. But as we said, today was a little bit more of a quiet day. The S&P certainly bounced, the NASDAQ as well, but we've talked about it's just kind of this choppy environment where you have a 20 below the 50, which is somewhat bearish. You have the moving averages sloping sideways, which is neutral, and then the market up above them, which is bullish. So something bearish, something neutral, something bullish. It's kind of the environment we're in. NASDAQ outperforming today, led by that Tesla rally on the upgrade. When Tesla's up 10%, and it's a big component of the NASDAQ 100, well, that group tends to outperform, and we saw that. So here, Tesla up 10, Amazon up 3.5, Meta up 3, the Qualcomm up 4. Those were the leadership groups. Energy really took it on the chin. I did the weekend trading room, and I talked about that it started to get to a point where maybe energy is going to have a little bit of a dip down. We highlighted an energy trade, but we put it all the way out in November. And why go so far out? Well, because we thought the short term could dip a little bit potentially, but in the longer term, you're probably still moving up and out. Now, let's highlight some trades. So we have energy. I'm moving it more towards a neutral. I don't think there's a ton of downside, but a little correction makes sense. And then we've got some bull and bear ideas. On the bullish side, DuPont, here you can see we're in still an ascending triangle pattern, and we're sort of at that point where these bounces, think of it like each subsequent bounce bounces from a little bit higher point until eventually you break out to the upside. I don't know if that's coming, but that would be the price pattern. Now, if DuPont breaks this way, below that 50 MA aggressively, well, then all bets are off. So we're kind of at that inflection point where it's kind of a nice pivot it can make, or it can break this idea. There's two possible outcomes. One's bullish and one's bearish. If it turns up, get on that bullish bandwagon. MasterCard, just an outperformer. It broke out recently to new highs, continues to work higher, currently in a little high base pattern up here. We would anticipate still more upside. As I said, I'm downgrading energy a little bit because if you look back to energy, we came right in to where there is overhead resistance, and just some areas where it could kind of stall temporarily. This isn't the end of the world. It's probably just going to check back and let some of these moving averages catch up a little bit and then work its way right back up. So if you extend out your time period, like we said, we don't mind trading energy, but now we've got to take profits. This kind of where my mindset is, and we talked about this a bit over the weekend in the trading room. Take profits on the shorter term trades, but move some duration out a little bit longer time period. So now if it trades down for a week or two, no big deal, as long as it's up by November or those time periods. And that's where I'm at. Short term, a little more neutral on it. Longer term, I'd still anticipate upside. Johnson & Johnson, a new bearish candidate, bearish cross. You've got some nice downward slope. You've got big volume on the sell-off, lighter volumes on the rally, everything you kind of look for. And now we would need a bearish candle, some sort of pivot formation, and then you could bet on another decline. So J&J looks a little bit more bearish. Abbott Labs, I'm also going to add this one to the bearish list. You've plunged down here to support. No surprise it bounces initially. I'd expect this bounce, though, to be short-lived because I think we're creating a little bit of an inverse cup and handle. And you can look to short it up here at the top of the handle. If this is an inverse cup and handle, where should the top of that handle be? Well, let's do the math ourselves. The support down here is 100. That's the bottom of the range. See, $100 per share. The upside was 115. That's the top of the cup. So the cup size is 15 points, 100 to 115. The handle should be about 30% of the size of the cup. So that's $4.50. So 104.50 is about the area where I would anticipate this stalling out. 104.50, if it gives a bearish candle, starts to stall out right there, that is the bearish entry point as I see it for ABT Abbott Labs. Some nice ideas there, I think, that can work out well. Markets are in a consolidation period. Energy's just been going, outperforming, and just got a little ahead of itself. Wednesday, we've got the CPI numbers. CPI is now trending upward again, and why? Because you went through the easy part. The easy part was huge drops that were guaranteed to happen in that July period where the prior year CPI had been so high, it was like 1.1%. You were getting rid of that, and you knew you were going to add a lower number. Well, now we're in the hard part where we're adding back in higher numbers than the prior, and so CPI is just starting to tick up. It's expected to go back up from 3.2 to 3.6 annualized. The Fed may not be done yet in terms of what it has to battle for price stability. Adobe Labs, Lennar, Oracle reported after the bell tonight. Not a whole lot there. Earnings season is mostly past, but a couple of companies reporting to pay attention to. Hope you enjoyed the market roundup. Have a great week, everyone. We'll see you next time.